Hello everyone, welcome back to Safe Stock Investments. Mahindra and Mahindra delivered another strong quarter with revenue growing 23% year on year, while profit increased by 7%. Although higher raw material cost put pressure on operating margins, Mahindra still exceeded earnings expectations. This performance highlights the resilience of its diversified business model and management's ability to deliver consistent growth even in a challenging business environment. Demand continues to remain healthy across Mahindra's major segments, including SUVs, tractors, and light commercial vehicles. Strong customer demand has enabled the company to maintain its growth momentum, and management has confidently reaffirmed its financial year 27 growth guidance. This reflects optimism about the business despite an uncertain macroeconomic environment. The company continues to strengthen its positions across multiple vehicle categories while simultaneously expanding its manufacturing capacity. With capacity expansion plans extending through financial year 31, management is preparing for future demand rather than reacting to it. This long term approach provides a strong foundation for sustained business growth. The EV segment is already EBITDA positive and cash positive, even without government incentives. Customer acceptance continues to improve, while the expanding BEV platform and growth gems business are creating additional long term opportunities. These initiatives position Mahindra to benefit from the growing shift towards electric mobility. Higher commodity prices, supply chain disruptions, and manpower cost affected margins during the quarter. However, management has responded proactively through the price increase, disciplined cost control measures, and improved operating efficiency. As production volume continues to grow, the initiatives are expected to gradually support profitability in the coming quarters. Mahindra and Mahindra combine strong customer demand, market leadership, and expanding manufacturing capacity, and a rapidly growing electric vehicles portfolio with disciplined execution. While near-term cost inflation remains a factor to watch, the company's long-term growth drivers remain firmly intact. Based on this strength, the research report reiterates a strong buy recommendation with a target price of Rs 3,950, making Mahindra and Mahindra attractive long-term investment opportunity for investors seeking sustainable growth. Thank you for sparing your valuable time. Thank you for listening to this video. Happy investing.